Welcome to another episode of Market Brief After Hours. We have a packed show for you today. Wall Street bounced back, driven by some surprisingly cool inflation numbers and a massive rally in semiconductor stocks. But it wasn't all smooth sailing. Geopolitical tensions in the Middle East are heating up, and we saw some massive, dramatic moves in individual corporate stocks. Let's start with the final scoreboard. What did the major U.S. indices look like at the closing bell?
It was a highly productive day for the bulls, especially in the tech sector. The S&P 500 closed up 0.38% to finish at 7,544. Meanwhile, the tech-heavy Nasdaq composite led the charge, advancing 0.9% to end the day at 26,107. The Dow Jones Industrial Average, however, barely squeaked into positive territory, finishing up just about 10 points, or 0.02%, at 52,508.
That is a pretty significant divergence between the Nasdaq and the Dow. Why did the blue chip index struggle so much while tech sailed ahead?
You can point the finger directly at IBM. The legacy tech giant weighed heavily on the 30-stock index, plunging 25% after warning that its second quarter profits will be lower than expected. They cited soft demand in both their software and infrastructure businesses.
We'll dive deeper into individual movers like IBM in a bit, but let's talk about the big macroeconomic catalyst of the day, the June inflation print. It came in much cooler than anyone expected, didn't it?
Absolutely. The Consumer Price Index for June fell by 0.4% on a monthly basis, which is the biggest monthly decline we've seen since April 2020. That brought the annual inflation rate down to 3.5%. To put that in perspective, economists polled by Dow Jones were looking for a much milder 0.2% monthly drop and an annual rate of 3.8%. Even core inflation, which strips out volatile food and energy costs, was flat on the month, bringing its 12-month rate down to 2.6% against the consensus forecast of 2.9%.
That is a major surprise. How did this impact expectations for what the Federal Reserve will do with interest rates next?
It shifted the outlook dramatically. According to the CME Fed Watch tool, the odds of a rate hike at the upcoming July meeting plummeted from 42% on Monday to just 17% after the CPI release. However, traders aren't entirely convinced the Fed is done tightening just yet. The market is still pricing in about a 60% chance of a rate hike in September.
And we also had Federal Reserve Chairman Kevin Warsh testifying before Congress. What was his take on all of this?
Warsh was actually quite confident, stating that the inflation surge of the last 5 years will soon be a thing of the past. Still, market analysts are warning investors not to get too comfortable. Warsh has maintained a very hawkish stance during his short tenure so far, and his primary tool remains raising interest rates to keep consumer prices firmly under control.
While inflation might be cooling at home, the geopolitical situation abroad is highly volatile. We saw some significant military action and policy shifts regarding Iran. How did that affect oil markets?
It was a highly volatile session. President Donald Trump announced he was abandoning his demand for a 20% protection fee on cargo ships transiting the crucial Strait of Hormuz, opting instead for Gulf states to invest directly in the U.S. That initially pulled oil off its highs. However, prices still ended the day higher because the U.S. military launched fresh airstrikes against Iran ahead of a planned naval blockade. U.S. West Texas Intermediate futures settled up 1.5% at $79.34 a barrel, after briefly topping 80. Brent crude rose 1.72% to close at $84.73.
Let's look across the Atlantic. How did European markets handle all this news?
Europe managed a late-day rally to close slightly positive. The Pan-European Stoxx 600 edged up 0.17%. Looking at individual countries, the UK's FTSE 100 climbed 0.3%, Germany's DAX rose 0.13%, and France's CAC 40 was essentially flat, up 0.03%. Switzerland's SMI was the outlier, closing 0.17% lower.
Did we get any notable economic data out of Europe to explain these moves?
Yes, we did. In Germany, wholesale price inflation slowed to 4.9% annually in June, down from 5.9% in May. This was largely driven by energy and raw material spikes from the Middle East conflict. Mineral oil products, for instance, surged nearly 22%. Meanwhile, UK retail sales rose 1.7% year-on-year, missing expectations of 2.9% and marking the slowest growth since February. And in Switzerland, producer and import prices fell 2.1% annually, extending their deflationary streak to 3 years.
Now let's head over to Asia, where we saw some incredible intraday reversals.
Incredible is the right word. Asian markets erased heavy early losses. In China, the Shanghai Composite surged 1.36%, and Hong Kong's Hang Seng rose 0.52%, powered by spectacular trade data. Chinese exports skyrocketed 27% year-on-year in June, and imports jumped 36% to a 5-year high.
And what about Japan and South Korea?
Japan's Nikkei index suffered a massive intraday drop of nearly 1,000 points to hit a one-month low, but staged a furious comeback to close 0.74% higher, led by tech and chip stocks like SoftBank and Kioxia. South Korea's Kospi had an even sharper V-shaped recovery. It plummeted over 5% early on to its lowest level since April, but clawed all the way back to close 0.73% higher at 6,856.83. Tech giant Samsung and SK Hynix both rallied over 3% on the back of global AI demand. Australia's market ended flat, while New Zealand's index dropped 0.52%.
An incredibly dynamic day across the globe. We're going to take a very quick break, but when we return, we'll dive into the currency markets, look at precious metals, and break down today's biggest corporate market movers. Stay with us. Welcome back to Market Brief, After Hours. Let's shift our focus to the foreign exchange market. Forex traders had a lot of data to digest today with the soft U.S. inflation print. How did the major currency pairs react, and what are the technical charts telling us?
The Euro-USD pair managed a decent rebound today, closing up 0.37% at 1.1423, trading between a low of 1.1378 and a high of 1.1462. Technically, it formed a strong bullish candle, but we have to keep in mind that the pair remains suppressed below its key moving averages. The 50-day simple moving average is at 1.1548. The 100-day is at 1.1595, and the 200-day is at 1.1642. This fanning out of the moving averages confirms a persistent medium-term downtrend. If it can hold above support at 1.1378, we might see a corrective bounce toward 1.1462, but the broader bias remains bearish.
And how's the British pound holding up?
GBP USD is consolidating. It closed up 0.32% at 1.3389, trading between 1.3342 and 1.3443. The daily candle had a noticeable upper wick, showing that intraday rallies are still facing selling pressure. What's interesting here is how the price is tangled right in a tight cluster of moving averages. The 50-day is at 1.3387, the 100-day is at 1.3400, and the 200-day is at 1.3397. This tells us there's a real lack of clear directional momentum. If it breaks below support at 1.3342, we could see a slide toward 1.3250.
What about the Australian dollar and the Japanese yen?
The Aussie dollar had a great day, with AUD-USD extending its recovery to close up 0.81% at 0.6973. It's now comfortably above its 200-day SMA of 0.6877, though still below the 50-day and 100-day averages, which sit around 0.7060. Meanwhile, USD-JPY is consolidating near its recent highs, closing slightly down by 0.15% at 162.18. The medium-term trend here is still decidedly bullish, with the price well above its 50-day SMA of 160.17 and 200-day SMA of 157.19. Let's move to commodities. Gold and silver have been under pressure lately, but they caught a bid today. Is this a trend reversal or just a temporary bounce? Right now, it looks like a temporary relief rally. Gold closed up 1.35% at $4,055, recovering from recent extreme lows. But make no mistake, it is still in a steep downtrend. It's trading way below its key moving averages. The 50-day SMA is at $4,347, the 200-day is at $4,474, and the 100-day is at $4,594. And silver? Similar story. Silver surged 2.11% to close at $58.82, bouncing from deeply oversold levels. But it remains heavily suppressed by overhead resistance. It is well below its 200-day SMA of $69.52, its 50-day SMA of $69.64, and its 100-day SMA of $74.01. Before we get to the big corporate movers, we should also mention U.S. Treasuries and small businesses. Yields fell today, didn't they?
They did. Following that cool CPI report, Treasury yields slid. The benchmark 10-year yield fell over 2 basis points to 4.583%, while the policy-sensitive 2-year yield dropped more than 7 basis points to 4.185%. On the small business front, the NFIB Small Business Optimism Index rose to 97.4 in June, its highest level in 4 months. Interestingly, even with inflation cooling slightly, 21% of small business owners still cite inflation as their single most important problem, up 3 points from May.
All right, let's talk about the individual stocks making waves today. We already mentioned IBM's massive 25% drop on that profit warning. Who else was on the move?
On the negative side, HCA Healthcare dropped 7% after lowering its full-year earnings guidance between $28.70 and $30.50 per share. OI Glass also had a rough session, closing down over 12% after a double downgrade from Bank of America to underperform with an $11 price target.
But we also saw some massive winners today, especially in cybersecurity and clean energy.
Yes, CleanSpark surged 9% after securing a massive 20-year data center lease in Georgia, which represents $6.6 billion in contracted revenue. And cybersecurity stocks absolutely ripped higher. CrowdStrike led the S&P 500 and Nasdaq 100, closing up more than 12%. Okta jumped over 10%, and Zscaler rose more than 7%.
That's an impressive showing for cybersecurity. Was it a good day for software across the board?
Actually, no. While cybersecurity shone, other major software names struggled. Atlassian closed down over 7%, ServiceNow dropped more than 5%, and Adobe Systems fell more than 4%.
Also, we can't forget the big banks. Goldman Sachs had a massive earnings beat, right?
Exactly. Goldman Sachs led the financial sector higher, popping 9% after posting strong earnings. J.P. Morgan Chase and Bank of America also gained ground, rising over 2% and nearly 2% respectively after releasing their second quarter results.
What a fascinating day of trading. Cool inflation bringing relief, tech rebounding, but clear underlying tension from the Middle East and mixed corporate earnings. That wraps up today's episode. If you find this useful, please follow Market Brief After Hours. We'll see you tomorrow.